Hello and welcome to this edition of the Market Share. I'm Paul Gifford, Chief Investment Officer of First Source Bank. Joining me today is Jason Cooper, one of our senior portfolio managers. Jason, a week ago we talked about the Super Bowl of economic activity with earnings and the Federal Reserve. We've had a lot of earnings since then. Can you tell us a little bit of some of the trends we're seeing since then?
Yeah, sure, Paul. What we have at this point is roughly 2/3 of companies of the S&P 500 have reported earnings to this point. And what's great about this is it's a good barometer or road sign in terms of what might be happening in the economy currently. And so when you look at these 2/3 of the companies, 75% of them had positive earnings surprises this past quarter. And I pulled up a few themes that we've been monitoring here at the bank that we feel is very important. And so a couple of them that I find that are significant. The first one would be that many companies are starting to accelerate AI. AI has been a theme and a topic that we've heard a lot about the last couple of years, and it continues to be at the what a lot of companies are referring to when it comes to earnings. The second one was we had one of the largest hospital providers, or one of the players in the hospital industry, report and mention that surgeries are up, so utilization is increasing. We also have one of the largest suppliers of restaurants and how much demand they're seeing getting pulled through to what they are doing in terms of the distribution of food to small businesses.
Clearly good news, and kind of goes with our theme that 2024 year should be a good economic year and probably a good year for the stock market. Mm-hmm. Well, if you have relatively good earnings, what do you get? You get S&P 500 going over 5,000 for the first time. Clearly made news in the last weeks. Why don't you share some of the comments on the S&P being at that level?
Yeah, timing is everything in terms of this video, where we have just recently passed 5,000 on the S&P 500. It's been really a good end of 2023 and a beginning of 2024. We have seen the S&P increase by 20% since November of last year, which is great. The slide that I have here shows just where we were back in the 1990s to where we are today, February 2024, and you can see we've hit that 5,000 number. And then the second slide, it's all about how fast this last go of it has been. Mathematically, it makes a little sense in terms of moving from 4,000 to 5,000 rather than 1,000 to 2,000. But you can just see in this chart how quickly it's becoming, hitting these 1,000-point marks in the market. It still has a lot to do with a very concentrated group of stocks, these magnificent 7 we hear so much about. But the good news is, going back to the discussion about earnings, we're seeing a lot more companies starting to provide some support to this market and possibly continuing the market to go higher from here.
Well, we're not going to complain at S&P 5,000. We're enjoying it, and obviously good earnings are a thing. And it also goes back to our point of being invested in the market. You talk about being up 20% in the last several months. You got to stay in the market to enjoy those big upside moves. So thank you, Jason, as always, for your comments. If you enjoyed today's video, I encourage you to share that with your friends and family. If you'd like to subscribe to the Market Share, please scan the QR code at the end of the video. And as always, thank you for the opportunity to serve you and your family, and have a great day.